Well, a warm welcome everyone, and thank you for joining us today. My name's Joel Carty from Solace Financial. Today we have Cathie Drysdale from Fortlake Asset Management. Cathie is a portfolio manager at Fortlake and is a PhD candidate at the University of Sydney, where she's using artificial intelligence to optimise fixed income portfolios. Cathie holds a master's degree in data science from the University of Sydney. Her background spans trading, portfolio management, quantitative analysis, and embedding sustainability into the investment process. Before her career, she taught economics and business and still lectures postgraduate students in computer science. But before we get stuck into our discussion, I would like to quickly provide a general advice warning. As we go through today's discussion, we'll be discussing financial information, which is general in nature, meaning it doesn't take into account your objectives, financial situation, or needs, so it's not a recommendation. It's important that you consider what we discussed today, whether it's important to you before acting on it. Please also refer to any product disclosure statements regarding the financial product for further information. Details of this general advice warning can also be found at the moneysmart.gov.au website.
Thanks for joining me today, Cathie. As a fund manager specialising in fixed income and credit, can you talk us through Fortlake's asset management's history and investment philosophy?
Yeah, certainly. So Fortlake was founded by Dr. Christian Bayliss in December of 2020, so kind of in the thick of COVID. And at its core, we're an absolute return manager. So we're thinking about how do we generate returns above inflation or those sort of real returns. And we think about fixed income as a broader asset class. So we don't just think about credit, we don't just think about rates, we're thinking about the entire fixed income universe. And so we're sort of making asset allocation decisions within that for our clients because that is our area of expertise. The thing that we also adds to the rates, credit, inflation, is we also have this default arbitrage sleeve. And that's something that really does set us apart from our peers within the kind of boutique asset management space.
Okay. Well, can you talk us through the investment process you guys make when you make your investment decisions?
Yeah, certainly. So we do have a very rigorous process. We call this process our trade meritocracy framework. And so this is a proprietary system that we use. And effectively what it achieves is it brings together a huge amount of quantitative analysis from market data to fundamental sort of credit analytics, broader kind of macro inputs, and then sort of some alternate data sources as well. And then it sort of aggregates all of this information and from there generates trade ideas. And we sort of then assess all of these trade ideas on a risk adjusted return basis, on a liquidity basis as well. And we do that sort of thorough overview and assessment in our investment team meeting. And that's where we have, everyone from the CIO all the way down to our analysts, and everyone has an opportunity to contribute to question trade decisions. And we're thinking about how they fit within the overall sort of portfolio framework. So yeah, every decision that we make has a quantitative lens, but then also a practitioner lens as well.
Okay. So you briefly touched on risk. How do you guys assess
Mm.
the risk when you make the investment decision?
Yeah, so risk is embedded in everything we do. Not only is it something that we have to manage from just you know thinking about having robust portfolios, but it is also something we see as a huge opportunity set. So sort of starting with how we think about risk, well, firstly diversification. So in all of our Australian unit trusts, we have well over 500 individual exposures over about 30 plus countries. So at no point in time will a single exposure sort of sink the portfolio. We're also trading in very liquid markets. So we're staying away from anything that doesn't have price transparency, anything that doesn't have active daily markets with volume where we can push through transactions if and when we need to. The other thing that we do that is inherently a risk, sort of a risk kind of pocket of the fixed income market is we actively participate in credit default swaps. So we're using those not only to hedge our risk, but then also to generate alpha. So because there's lots of relative value opportunities within that market, just like any security, CDS has times where it's rich, where it's cheap, and we can be advantageous around when we invest in that market.
Okay.
Yeah.
So over the last 12 months, a lot has happened. We've had the tariffs that
Mm,
were introduced. We've started to see
yes.
some countries have inflation increase and interest
Mm,
rates increase. Other countries' inflation is decreasing. So
yeah.
what are the opportunities and risks that you see in the market at the moment?
Mm, yeah. I mean, it's a very interesting market at the moment. I think, we have the US, talking about a cutting cycle, and then we've got Australia talking about a hiking cycle, um, and then, one morning you wake up and there's a huge sell-off because of the kind of SaaS apocalypse and AI, and then, there's a taco trade that's coming through. So there's lots of different undercurrents in markets at the moment. But something that's been really consistent through all of these sort of undercurrents, all of this noise, is trends that we're seeing in bankruptcies, particularly in small to medium enterprises. So as I suggested before, we look at a lot of alternate data, and we access a lot of information around from the US court system, from the European court system around bankruptcies, Chapter 11s, out of court restructurings, all that sort of information. And when you dig into that data a little bit, you can see that SME bankruptcies are trending above average they're at their highest level on record for the last 3 months. And so we see that continuing through 2026. And for us, that's very much a canary in the coal mine. So if we're seeing this weakness in the SME level, when is that going to start to permeate through to debt capital markets and that credit default swap space? So we're pretty constructive on investment grade credit. So we quite like being long credit default swap indices in investment grade across a number of jurisdictions. So that can be in Australia, that can be in Asia, that can be in Europe, in the US. But then we're shorter on the high yield side of things. And so if you do look at CDX high yield at the moment, if you look at the names that are the 10 widest, they're taking up, they're generally a huge proportion of the spread risk that we have at the moment. So we really think that being short high yield versus long IG is a great way to capture opportunities within the portfolios, and particularly as we start to see the defaults come through the debt capital market space.
Okay. Now, what are Fortlake Asset Management's greatest strengths as a fund manager?
Yeah, so I think our greatest strengths are, firstly, we have the ability to invest anywhere in fixed income. So that means we are incredibly agile. Um, we can move into rates when we need to. We can move into credit when we need to. We can move into EM debt when we need to. We can stay in developed markets. So whenever there's an opportunity that presents itself, we can participate. The other thing about our investment team in particular is we have this great representation of practitioner knowledge, but then also strong academic sort of theoretical background. So if you look at the expertise of Christian, he has a PhD in inflation and forecasting. Background is sort of the RBA, is UBS, and then you've got myself. I'm studying a PhD in AI, fixed income portfolio optimization. When we're recruiting at the junior level, we're very much looking at a machine learning kind of background. And so we can use that quantitative expertise plus the practitioner experience, bring those together, and really kind of use that to find opportunities within the market, within essentially a huge, huge market. The data analytics and capability that we have means we can harness a huge opportunity set and distill it down to actionable and executable trade ideas. But then there's also this really unique default arbitrage sleeve that we have within our portfolios. There's a few things going on there that kind of uniquely position us within fixed income in Australia.
Okay. Can you talk us through a period where you've had poor returns and then turned it into an investment
Mm,
opportunity and the performance around?
Yeah, absolutely. I think the most recent example, I mean, when we've had a few, downturns that have turned into a sort of a hockey stick effect, and that's actually very much part of our investment process. So I suppose a really recent example is Liberation Day. So, in April 2025, President Trump comes out with this sort of sweeping tariff announcements, and markets sold off sharply, quickly. There was huge volatility. Fixed income was part of that journey, huge, and then there's this huge sort of V-shaped recovery. And throughout that that process, and there was a couple of weeks there in particular where it was very rocky. We used a lot of delta hedging, and we uh, we were in a position to benefit from that volatility. So we had a drawdown on our portfolios, but because of the delta hedging that we were able to put in place, we've actually since seen this excellent like hockey stick effect. And now, over the last 12 months, across all of our three Australian unit trusts, we are, we are a leader on returns within our peer group, according to Morningstar data. Um, and so that's the most recent example. We've also had examples of that with SVB, with the UK mini budget. There's quite a number of instances where that drawdown has generated huge returns after the fact.
Okay. Well, what are some of the investments that you have made recently in the portfolios?
Yeah, yeah, it's a great question. So obviously, I kind of alluded to earlier where we're long investment grades, and then we're short high yield. With any fixed income portfolio, we constantly have to manage roll down of duration. So we're thinking about ways of how do we top up on risk as it decays through time. But then we also have our core bond holding. Spreads are very tight in Australia from an investment grade kind of perspective. And we do have that core bond holdings, but bond holding that we need to have in our portfolio. So we're keeping our risk very liquid, pretty short, as much as we can. And then we're continuing to kind of position ourselves to capture those high yield defaults. So keeping very much in line with um, our sort of core philosophy and our investment process that we had for a long time. But what that means is we are getting that running yield coming through the portfolio of our core bond holdings, whilst staying pretty well anchored if we would see any sort of move wider in spreads. So we'll get that income, but not too much of a hit on the mark to market valuation. So we get the income there, and then we've also got the credit default swaps, the investment grade kind of length coming through there. So that's also adding income and another source of returns to the portfolio. And then there's that final capturing of defaults in the high yield space. So I've got a few sort of sources of return that are constantly permeating through the portfolio.
Okay. Now, Cathie, with so much information coming through on a daily basis in the financial
Mm,
markets, how do you guys stay up to date with what's going
yeah,
on?
yeah. I mean, we are so saturated with information, and it's trying to work out what's the signal, what's the noise. For me, it's a daily discipline. It's I wake up quite early because at Fortlake we do a lot in US markets, so I get up to make sure I'm sort of across the close of the US session. Um, and so I'm reading broker chats, I'm reading the news, I'm spending a lot of time reading, a huge amount of time reading, having conversations with our sort of salespeople. We get covered by some fantastic um, banks, and they've got huge research capability. So really kind of anchoring on a lot of that information. But then also, I've mentioned a few times now that something we do quite well at Fortlake is our quantitative analysis. And so we're doing a lot of data mining and a lot of sort of data analysis, which we bring into a daily run sheet. And so in the daily run sheet, which is this comprehensive 40+ page document, we have sort of a summary of what's happened in global rates markets overnight, what's happened in global credit markets overnight, equities, currencies, any major economic announcements that have happened, any major economic announcements that will happen. And so we're trying to aggregate as much as we possibly can and put it into a digestible format. And so that's kind of very much the transactional way of staying up to date with financial changes in financial markets. But I also spend a lot of time on my research, and my the work on my PhD does also help me to kind of stay at the frontier of what's happening in a quantitative finance space as well.
Okay. Now, Cathie, what makes a good portfolio manager overall?
Yeah. So I think the first one is a lot of intellectual humility. Markets are incredibly humbling. I mean, and particularly in the Trump era, like one moment you think you know economic theory, and you think you know the relationship between inflation and employment, but then it kind of goes out the window. So I think being prepared to be wrong is incredibly important. And I think the best portfolio managers that I've ever met, and Christian, who's my CIO, is doing this constantly, is he's always like questioning his own assumptions, because that's when you will be caught off guard. I think the other thing that makes a really good portfolio manager is discipline. So like our trade meritocracy framework, like checking market color every day, it's just staying really disciplined and really focused. And then I think the last thing is just a whole of curiosity, is wanting to know more all the time, and being really hungry for new information, being really hungry for opportunities and alpha as well.
Okay. So, Cathie, we've covered a lot in our conversation today. Is
Mm.
there anything else you'd like to add before we leave you?
No, I think there's just so many opportunities in the market at the moment, and I feel like particularly now more than ever, as everyone's talking about AI and what it's doing in equity markets, I think we're seeing this huge kind of cross section now between a lot of these big names that are just growing, and these hyperscalers, the Amazons, the Oracles, the Googles of the world. And a lot of them have a really active presence in credit default swaps and in bond issuance. And I think now more than ever, because we have this integration between, the biggest names in the S&P and NASDAQ and so on, that they're also, they're dictating what's happening in debt capital markets and fixed income markets as well. So I actually think we're in this really, really interesting time. And fixed income has a lot of opportunities to deliver to end investors.
Okay. Well, Cathie, I appreciate you making the time to talk to us today.
Thank you. And I really appreciate the invite. It's always great to chat to our investors.
Cathie, I really appreciate you taking the time to talk with us today. If you'd like to talk to Solace Financial regarding your current financial strategy and whether it's suitable for your goals and objectives, please reach out and contact me via our website or give our office a call to schedule an appointment. Till next time, we'll be watching.